Hello traders, in this video I'm going to be sharing with you a secret technique that will increase your trend line strategy that you hardly lose any trade. So I'll be sharing with you the best type of trend lines to trade and the ones that you should not trade. It's not every trend line that is suitable for our traders, right? So basically, I'll be sharing with you which type of trend lines are more suitable to be traded, and I'll share with you three terrible mistakes people do or trend line traders do that usually stop them from making money from trading the trend lines. So in this video, you basically will be seeing how to increase trend line strategy, the win rate of our strategy, how to draw them the right way, the best type of trend lines to trade, the best types of trend lines to trade, and then we're also going to be seeing the three mistakes that traders do which keep their win rate low. So you want to watch this video to the end if you want to increase your win rate.
Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
So basically, trend line are just what? A form of diagonal support and resistance, right, in an uptrend and in a downtrend. So in an uptrend like this, for instance, this trend line will act as support when price comes back and hit. Okay, so basically when price is moving and it gets rejected in a trend line more than twice, there's a high probability that when price comes back the third time, it's going to respect this zone here, making this a diagonal support, right? So sometimes price will pull back, we'll have to take our trades here, and then we want to target those highs there, right? And we have the same or the exact opposite with a downtrending market. A downtrending market like this, right? You see that sometimes price will reject in a zone once, right? Then it will come and then reject in the same zone twice. Now once it rejects, we already see a form of uniformity here, because here once twice it becomes a resistance in this situation. Now we'll only be waiting for price to come back and hit for the third time, or from the third time they will start taking our sell trades based on this. So it's a diagonal form of resistance, which is just another form of resistance. There could be resistance that's in the form of a horizontal resistance, where price also get rejected in a zone more than once. People will be looking for price to come reject the third time. Like for instance, this could be rejection once, rejection twice, and rejection thrice, and people will be entering. But there are also diagonal resistance, which usually come up with what we call a trend line diagonal resistance or diagonal support. So many people make some mistakes in drawing this trend line. It's not every time where price will come and hit the third time that you enter. There are some other things that you have to pay attention to, and that's why your win rate is low. So I'm going to share with you these secrets in this video. Now, so first of all, now we'll talk about how to draw trend line properly. Now if you look at this market structure here, you're going to see we have a downtrending market structure. Okay, and if you look at it very well, you see that price is actually moving down and then creating higher highs and higher lows. These highs here, we call them peaks. All right, we call them peaks, and they are usually being identified when you connect the first, the second. Price is most likely going to start respecting from the third. Now we want to draw a trend line. Look at obvious zones. All right, look at obvious zones where you can get many connections. You can always try to adjust so that you get many touches. Right now, if you want to draw a trend line from this chart here, I cannot start drawing from this high, because if I start drawing from this high, right, and then I draw like this, I'm going to cut across a candlestick, even though that in a smaller time frame could be another entry there, right? But I don't want my trend line to be steep. Okay, what I do now is I try to instead connect like this, right? I'll try to connect like this, because normally in a smaller time frame this could be opportunities, but now we want to be trading sustainable trend lines. All right, now we'll enter from here. I'll instead prefer going like this, because this one will be more sustainable. This is not too steep, so I'll pick like this, right? I pick from the highs, right? Make sure that you get the touches, just touch the hit the peaks of the candles just above the candlestick. You make sure you touch the first and the second zone, right? You don't draw like this, you don't draw like this. People have different philosophies, but I draw what works for me. So I draw at the peaks. Okay, you don't skip this one to go and pick something else, maybe afar, right? You just take from this high and then you draw to the next high, right? When you draw from there, you have already identified a support. The price has rejected once. Okay, it's going to come back. Now what I do is that you extend it further, okay, because probably that's where we are going to be taking our trade setups from, where price start hitting the third time. Now you see that from here price drops down and then comes, rejects once. Well, when price comes back the second time, the third time, this is where we are going to be taking our trade, because once it has rejected here, this is the first rejection, the second, from the third we are going to start taking our sell trades. So we short here, right? We short here and our stop loss should be above that zone there, just as simple as that. Okay, and then wait, you see that price dropped, right? So what we do now, we wait for price again to come and hit the trend line. Wait for price. Now look at the difference between this trend line and this. You see why I preferred us drawing obvious wicks that are really, gently sloping, not this steep, okay, because these ones are not sustainable. Now what happened, you wait for price to come back again. Now you see that price comes back again and hit the zone here. All right, in the smaller time frame, like maybe a smaller time frame, if you drop, you're going to see rejection candles here where price probably hit the zone and then drop further down. Okay, and then we enter, right, you place your stop loss above the candlestick. Right, what happened, price drops powerfully. Okay, well, price drops powerfully and you see that price move until we'll be expecting price again to come back again and respect the zone, because automatically this zone has become what, a resistance in this situation. So from here now you can catch as many trading opportunities as you want. Now let me go now to a bigger time frame. I'll show you. We have another major trend line in the bigger time frame. So here, if you look at the bigger time frame, which is the daily, right, you are going to see that we have a big trend, another zone here. So you connect the first stuff, you connect to the second, which is this. Look at how I connect. Make sure I get my wicks, guys. So when you touch like that, right, and then you drag further, you see that in the H4 time frame you would have already had very good, a very good trading setup, because from there you see that price, after rejecting once and twice here, once, okay, came and rejected twice, you see that from here you would have already taken a good sell opportunity, which is just the same concept, guys. It's just the same concept. So we just used a smaller time frame for the first example, right? So okay, so you see now the price drops and drops powerfully. All right, now that is simply the way in which you can draw what, trend line. You just make sure that you connect and you get the touches, right? So you are just connecting the tops of the candles, right? You are just connecting their tops, and then you just want price to hit the first, second, because from here when you connect first, second, price start hitting first, now it just forms as what, a resistance. Now let me go back to our course outline. Now I've talked about how to draw trend lines the right way. Now the best way to trade trend lines, all right, I've showed you how you can trade trend lines. Okay, so you enter, all right, you enter at this high here, okay, and then your stop loss is above the zone, and then you wait for price to drop. Now there are times where you can place sell limit orders, like for instance this trend line, as it is moving down like this, you can do this. You can place a sell limit order here, right, because you wait for price to come back. As price comes, you just place a sell limit order and then a stop loss above there and a target below here. So that will simply means that what, you can place it like this, okay, and then you just place your stop loss. A sell limit is a pending order that can execute, that you place when price is still going to hit our zone, and once price comes back and hit this zone, it's going to execute automatically even in your absence. So when it comes, because sometimes price will just hit the trend line and drop powerfully, like for instance like in this situation here. Just imagine if you had a sell limit order here, it helps you to enter at the best price possible, right? Because sometimes if you want to wait for candlestick to reject and close maybe right down, you are going to incur a bigger stop loss, so your stop loss is going to be wide. So sometimes you place a sell limit order that will help you to enter at the best price possible, right? So when you short now, you see that price will just come and then go execute your trade, right? Now that is how to trade the trend lines, how to draw and trade the trend line. So you can enter through market execution while you wait for price to come and hit the zone. You go to smaller time frame and identify rejection candle, or you place a limit order. Okay, now let's look at the course outline. Now we said that, okay, we have talked about best way to trade, and now the best types of trend lines to trade. Okay, now I'll share with you two types of trend lines, right? The best types of trend lines to trade, we see this is another type of trend line here. Okay, this is not the same with the first one. I'm going to share with you why. If you look at this very well, you're going to see that here we have price reject first, second, we use the same concept, right? And fine, this was an entry that went out very well, all right. But this trend line is not as sustainable as this trend line. Okay, I'm going to share with you the reason in a minute. Okay, now if you look at this trend line here, we had price actually reject the first and the second time, first and second, and then we had to enter here, like it will drop very well. That's nice. But if you look at this trend line, it's not sustainable. Why? Because it's very steep. Okay, you see that this trend line is steep. A trend line that is drawn like this is not the same with a trend line that is drawn like this. You get the point? So this type of trend lines, you can only trade them maybe once, but this trend line here is very gentle. And when you see a trend line that is gentle as this, then there is a high probability that price is going to respect this trend line many times. Okay, and you see that it is more sustainable. This kind of trend line hardly get broken as compared to this one here, right? Because if you look at this one, you see it's very steep, and if you see it has already broken. All right, now that is what I'm about to tell you. So that's the difference between the two type of trend lines. So it's not that this one does not win, it wins. But remember, in trading we try to get a higher probability. All right, like here you could have gotten a good sell trade, but if you look at this trend line here, you see that this one is more sustainable than that. All right, that is it. Okay, so moving on to the next thing, we talked about what mistakes traders do while trading trend lines. So the biggest mistake other or trendline traders do is they only zoom out and pay attention to the immediate time frame in which they see, or the immediate chart situations in which they see in front of them, but they forgot to pay attention to measure support and resistance zone. Now look at this example here. Let me just zoom out to zoom into smaller charts, and you see what I'm saying. Now if you look at this very well, we're going to realize that this is a key zone, a key support zone in the via X75 charts. If you look at it, this is a key support zone here, and as price moves down and hit this zone, there is a high probability that price is going to move up. But someone who drew a trend line like this and did not know that this is a zone here, trading this zone will be a mistake, because price will be reacting to this key support zone here, and it's probably going to break out. So now if you start trading here, then you are wrong, or let me say you are not going to get a high win rate. That's one of the biggest mistakes. So always identify these zones, major zones, before you zoom to your trading time frame. Right now, the second mistake, which we already stated earlier, was drawing trend lines or trading trend lines that are too steep multiple times. Okay, if you see a trend line that is this steep, all right, it's possible that a gentle sloping trend line, price could come and reject as many times as possible, so you can trade this even 4 times, right? But if you see a trend line that is this steeping, all right, the maximum you trade once, right? Even if it's not in the resistance zone, you have to, or support zone, you have to pay attention, be careful while taking another trade. All right, because these trend lines that are too steep are easily broken, and you easily get fake out. All right, if you look at it very well, you see that price move, and since it's too steep, price does not have the ability to reverse at the key zone. You see that if this trend line was gentle, for instance, if this trend line was gentle like this, okay, you see that it will give the market enough space to reverse back to this zones, which could be even supply zones and all of that, before we be taking a trade. But now, since the trend line is too steep, it has not given the market room to reverse properly. So by the time price just start reversing a little bit, it has already hit. So if you are selling here, it will not make much sense. I will not even give a good risk to reward ratio. That's one of the errors that traders do. Okay, and why other traders do not even draw the trend line properly, they go and then they skip the zones, they go maybe draw and then like this, make them even steeper, or maybe skip the first zone, go and start trying to connect the next zone, that you are going to miss trading opportunities, you are going to enter at the wrong time and all of that. So basically, that's what I have for you today, guys. I hope this video was helpful. I'm going to bring to you guys more videos on trendline mistakes and other appropriate way of trading the trendline market. So make sure you subscribe to the channel by hitting on the subscribe button and notification bell to see more. Drop a comment in the comment section below. What are your thoughts? And please give me a thumbs up. You can join our free Telegram channel. I'm going to drop the link in the Telegram in the video's description, and also in the pinned comment down below. So make sure that you stay tuned, and see you in the next video.